The following is for entertainment purposes only. We are not financial advisors. We are not responsible for any losses, only the profits.
What's happening, Octo family? We got a lot going on, and I want to jump in and get a big old video out for you to prep you for Monday. A lot of news, SPAC news going on, some different perspectives I want you to pay attention to, and just keep an ear out. Sport Trader, you all ever see my video on them? Sport Trader, speculating who I think might take them to market. If you haven't seen that video, check it out. A gambling data company embroiled in a legal row with football's English Premier League, not American football, is limbering up for a stock market float that could top $10 billion. Swiss headquartered Sport Trader is preparing a beauty parade of investments bankers ahead of a public debut in New York Stock Exchange earlier next year, industry sources said. Former basketball player Mr. Michael Jordan would be among those in line for a payday, with Sport Trader currently targeting a broad valuation between $5 to $10 billion. Michael Jordan, man. Special purpose acquisition company, a SPAC, could be set up to fast track the process, they added. Sport Trader has several legal proceedings against BetGenius and Football Data Co., a joint venture between English Premier League Football League and Scottish Professional Football League. BetGenius was granted an exclusive license to match data from Football Data Co., an arrangement Sports Trader claimed is being breached out of the UK and EU competition law. So off the top of my head, what SPACs could bring them to market? Help bring them to market. Number one, I thought it was Jaws, man. You haven't seen my video on Jaws? Check it out, JWS. I think this one could totally do it. What about Mr. Chamath? What about IPOF? I might be able to afford to do it. I don't think the other one's by IPOF. But are really people going to care about it? I like having Michael Jordan on the team. I think that alone is huge, but is that enough to carry it? Let's look at DMYD. Did you see my video on DMYD? Take a look. They're in talks to bring Genius Sports, which is known as a direct competitor to Sport Trader. They're not as big, but what happened with that stock? Not much, man. Not much at all. In fact, it went from like $10.10 to $10.60 and down and up and a little bit down. Now it's like a 10.05. For SPAC people, that just looks terrible. So I don't know. I think Sports Trader will do a little bit better because it's, I think, known as the biggest player possibly in the field. That, and then you got the Michael Jordan. Probably do a little bit better, but will it go totally parabolic? Judging by this, I mean, I don't know. It doesn't look like it. You think that this would have actually gone up to at least 12 or 13, but didn't even hit 11 or 10.75. Keep in mind that was one of the worst days ever to release a SPAC info, but regardless, something to keep in mind. Bloomberg came out with an article that said technology stocks are in an enormous bubble. Greenlight Capital's David Einhorn said in a letter to investors. Our working hypothesis, which might be disproven, is that September 2nd was the top of the bubble and has already popped. He wrote October 27th. Tech stocks have driven the market gain this year. The NASDAQ 100 index is up 33% since January 1st, led by gains in Zoom video communications and Tesla Inc. By contrast, the S&P 500 has risen 5.3%. Einhorn points to an IPO mania, huge market concentration in a small group of stocks or a single sector, extraordinary valuations, and incredible trading volumes in speculative investments as a sign of a bubble. I think usually when these articles start coming out, it's already ahead of the trend and already flipping. If this article came out September 2nd, it would have carried a lot more weight. Get to that a little bit later. As a result, Greenlight has adjusted its short book, including adding a fresh bubble basket of mostly second-tier companies and recent IPOs trading at remarkable valuations, he said. I don't know. What do you think? Let's get your mind going. Mr. Charles Ergen's SPAC popped. CONX finally open. priced a $750 million IPO at $10. Who is this guy? Well, he's known for Dish Network. Y'all have Dish out there? You're more of cable Dish people. The SPAC intends to target the TMT industry, technology, media, stuff like that. Try it with a specific focus on wireless communication. Right away, I heard that and I thought, what are they gonna like bring a new cricket to market? It just seemed kind of lame to me, right? I don't know. What do you guys think? A wireless communication, but that could be something else. Is it like some sort of new technology with NFC or 5G, something crazy? I don't know. Let me know. But right away, I was like, wireless communication. I guess that could technically mean a cool app. Could it be a cool app? I don't know. There's decent other people in this one too. Check it out. It's a big, huge immerse. Something to follow. It's out. We're going to move on now to Hippo. Y'all heard of Hippo? Will Hippo be the next fintech unicorn to exit via SPAC door? If you don't know, Hippo is a 5-year-old Silicon Valley startup that offers homeowners insurance. Right away, I was like, oh, come on, man. It uses satellite imagery, public data, and smart home devices like water leak detectors to speed up the application process and minimize claims. In July, it raised $150 million and is funding at $1.5 million valuation, up from $1 billion earlier this year. As of summer, it was bringing in $270 million in annual premiums, up 140% prior year. Juan says there's a good chance he'll take his company public in 2021. Then it goes on in this article to actually up-talk SPACs. They take as little as 8 weeks to execute compared to the roughly 6 months of traditional IPOs. One reason they're popular with investors is because the funders can walk away with a large ownership stake, often 20%, in the newly publicly traded companies. Several industry insiders include Acorn's co-founder Jeff and venture capitalist Ryan Gilbert say that every fintech unicorn is being approached by SPACs. Yeah. In September, real estate fintech company Open Door announced it would go public through Mr. Chamath. Y'all in that one? You surfing that one? Both SPACs and traditional IPOs require companies to pitch their business. We know that. He came in and said, I think certain businesses are better talked about in the future than in the past. Ryan Gilbert said, a Hippo investor and a co-sponsor with $750 million SPAC with Bancorp founder and former CEO Betsy Cohen. That's what venture capital is all about. This still goes on and just, it's good. It's good talking about SPACs. Because it's a merger, you can negotiate everything. You can negotiate the sponsors. Take stake 5% instead of 20. You can say they'll only get the 5% if the stock goes to a certain price he adds. There's lots and lots of good things about SPACs. The big one for the founders is they don't get snowflaked. If you don't know what I mean by that, just look what happened to Snowflake when it went up. Founders and stuff ain't getting that money from that big old run up. They was undervalued. At least the people get way more money up front, with better valuations, at least for the company trying to go public. Is Hippo a place I want to be? No. It just seems boring. It could be fine, but mortgage insurance stuff, mortgage no, insurance no. How about some possible targets for Hippo? Y'all heard of Cascade Acquisition? They've got $200 million in the MERS, which would fit, and they talked about insurance. How about Eaststone Acquisition Corp? ESSCR. Declared fintech online lending is one. Credit data analytics is two. One more is that I'm excited about. How about InsurTech? Insurance technology, insurance platforms with AI. Even though online lenders could be cool, but those are two I think that could definitely do it. Are people going to care? I don't think so. Other than the Chamath one, dude, most housing stuff doesn't do too incredibly well, but the insurance stuff definitely doesn't do well. So we'll just have to see. But here's Multiplan, down to $7.30 now. Got up to 13 when it was still a SPAC, and now it's not, and it just tanked to now it's just going down. Doesn't look like an industry I want to be in. So, does Lion compete with HYLN? I had this video come out, if you haven't seen this, about the company Lion, and Northern Genesis. Go watch this one. I have admitted many times that I'm not the guy who knows everything about HYLN. All right, I'm just not. I missed it, so I just forgot about it. Whatever. But I was trying to correlate them and see if they're direct competitors. What most people are telling me is not really. So most are saying no, as HYLN can go over 1,000 miles, but also needs a separate fuel source, so they're not 100% electric, and is also carbon negative versus lithium only. Okay, but the truckers can legally go 650 miles a day. And the problem with these Lions is they're only going like 150, 200-ish, 50, somewhere around there. Let's call it around 150. So it just doesn't make sense for the long haul. So basically, HYLN is long haul stuff. The Lion stuff right now is just going to be good for like around town Amazon-y stuff. And that's probably why Amazon said, hey, give us 10, right? So maybe in the future, because I know HYLN's looking to do 100% electric later down the line, so then they will be competing then, but still same space, just not direct. Not direct. We have to take a look at this. Home loans are doing amazing at record house sales across the country, right? That's what everyone keeps telling me. Home loans are doing nuts. You know, mortgage people are like, dude, it's time to buy. Interest rates are so low. Everyone's buying houses. More than $31.2 billion across 800 loans have been granted forbearances thus far on September remittance data, which represents about 5.5% of the non-agency CMBS universe, said Trepp. Here is a delinquency and special servicing rate from September 2005 to September 2020. If y'all were around and pay attention to money and mortgages and stocks and stuff back around 2007, 2008, when it all started, everything was looking so gravy and everything just looked gravy because people were still holding on to their houses. People were still making the payments. People hadn't given up yet. What happened in September 2008? This red line is the one you need to pay attention to. This is basically the special servicing rate. That means when something special needs to happen because people ain't paying. Delinquency is a little bit different because it can be diluted with fake payments, weird contracts and deals people can make up, such as government money being brought in. You know, you want to look at the special servicing, but still this is going to be slightly delayed. What am I getting at? Take a look at this. At the peak, we were at, let's call it 13%. And that didn't happen until March of 2010. Let's just call it roughly 2 years to peak out. Here we are in March 20. We were getting pretty low. People were still behind though. We were still sitting at like, 2 to 3% on average just in the past year of delinquency, which is not good. I've seen several studies out there that have talked about how around like 15 to 25%, depending on which market, of course, people are still flipped in their houses from back here. So there's still people that have been still paying on these houses that they're still upside down in from back here. That's why this number never got, one of the reasons this number got, it's too low there. If you can see this blue, look at the blue line here. See how it dogtails at the end? It goes down. This is again for free money coming in and stuff. Because look at the special servicing rate. When this went down, this actually kept going up. This is just the beginning. People still believe that once something happens that we're finally going to light switch the economy and just everyone's just going to go back to work. Not unless everyone just gives up and says we're just going to have to deal with it, right? I haven't heard or seen a solution that could light switch what's going on and fix it, other than people just saying forget about it. Not only that, many businesses are just not going to be back open when people go back to work. I'm not trying to be doom and gloom for y'all. Just trying to be your friend. Let you know that if you've got a mortgage guy out there, you got a realtor that's trying to talk you into buying something right now and telling you everything's fine, home sales are through the roof, Just try to step back and look at the macro picture a little bit. Let's be real about it. How about commercial payments? How are these looking? Well, here's lodging. How does that look? These are delinquency, by the way, for lodging. You can see before March, delinquency was at like 2%. Almost right away, it zoomed to 20%. It is now sitting about 26% for lodging. Retail, maybe 30% less, but you can see very, very drastic. The Trepp Special Servicing rate saw an increase of 44 basis points in September, coming in at 10.5% compared to 10% in August, like the last few months. The surge could be attributed mainly to an increase in the retail and lodging special servicing rates. The retail special servicing rate clocked in at 18.3% in September, up from 17.3% in August. The lodging special servicing rate came in at 26%, up from 25% in August. It's not good. Both the lodging and retail special servicing rates were the highest recorded to date. The overall special servicing rate is the highest record since May 2013. Going forward, it is likely that the special servicing rate will continue to increase in the coming months. This is from Trepp again. We're most widely known, the people that are data about this stuff, hardcore data. Check a look at this. Historical delinquency rates, great financial crisis. That was the 2008, 2009, 2007 stuff versus the CVID March stuff. Worst it got back in 2010 for lodging was 18%, 19%. Because back then it was still legal. Even though no one had any money, it was still legal to go on vacation. Lodging's at 20 to 24%. Airbnb has been firing and laying people off for months and months and months. You can see this is starting to go down a little bit, but just pay attention to it. If you think this is going to zip all the way back down to here again, just wait. You can come take a look at any of these graphs if you want on my site. They're all here. How about cumulative appraisal reduction amounts? Time series during the Great Financial Crisis. Appraisal reductions, stuff going down, okay? So stuff was continuing to go down and it's kind of leveled out, but it's still down. This is further correlating what I was saying earlier, how a lot of people are still flipped from back here. See that? Office, other, mixed use, multifamily, industrial. What we're going to take a look at now is something called the COT reports. I haven't really talked about these much. They technically can't be forged or lied about, but people like JP Morgan and the likes of them have been in trouble many times for lying about them. That's why I don't pay too much attention to them. But overall, they can paint some good pictures. Why am I bringing this up? If you can see what is going on here to the S&P 500, basically they divide everything up between like the big commercial people. Let's call it like the big bankers that are going to be throwing down 10, 20, $50 million on things left and right, versus the, let's call it retail individuals, maybe like you and I. People that can't, market movers with one trade versus ones that you won't even know happened, right? So what's going on here? Basically, when these dealers versus speculators down here, when these two lines start to cross, you usually have a flip in the market. So back here in March, you can see the white line started going down, right? But then it started going up because we started going up, and now the white line went down, right? And then we peaked when? When do you think this was? Right at out of September 2nd, what that dude way up there was talking about? Where the bubble popped from Bloomberg? Look what's happened since then. It's going up. You can look at a lot of SPAC stock prices, a lot of, let's call them like smaller cap stocks we talk about, I bet you it correlates with this right here. What does this mean? It means that it's right at a breaking point, because you can see they've come now together and touched. This looks like it's either going to hang out or it's going to keep, if it keeps going in the trend it's going, this is where the stock market is going to come down again. S&P 500. So we might want to start paying attention to this a little bit. This is either just doing a little love tap or walking out the door. Here we go again. This is another way to look at it. Another chart here for you to look at. We've got the same thing. You can look at the small specs, large spec commercials. The open interest is starting to go up, which is slightly good, but it's still pretty wonky. But you've got divergence. Okay, these are starting to change again. Once this right here, this is the small speculators. Once this started going down, what happened? Stock started evening out, going down. Once it started going up again, it went up a little bit. Now people are freaking out. How about Bitcoin? This one tripped me out a little bit. So this is in long positions, commercial, non-commercial, non-report, smaller dudes, commercial. Non-commercial is going to be some retail, but smaller people, right? Commercial, though, is what you want to pay attention to. Everyone is getting long on Bitcoin. Historically, look at this gray line at the bottom, which is the commercial. They're never long Bitcoin. They started getting into Bitcoin, though, end of July. They dipped down. We had the last leg of the M when we hit all-time highs, like what, 2 months ago or whatever, September 2nd ish. Then it started going back up again. The M, remember the M we see in the S&P 500? If you don't know what I'm talking about, look at Thursday's video of charts. But it started going up. They're taking long positions. Not only that, everybody is. Look at this. Everyone is starting to get long on Bitcoin. It's pretty rare. And it's definitely rare to see commercial jumping into Bitcoin. We've seen a lot of businesses and institutions taking money, and instead of keeping it in banks where it's not going to do anything but lose the money, and putting it into Bitcoin. PayPal just jumped on Bitcoin. It's massive. If you didn't see my video about that, take a look. After all the hype around blank check companies early this year, things have gotten ugly, with those shares selling off amid stock market rout. The Defiance Next Gen SPAC derived ETF SPAC, which primarily tracks companies that raise money for buying businesses, has plunged more than 14% since October debut. Online sports betting company DraftKings has tumbled 40% this month, while Virgin Galactic Holdings, developer of space vehicles, is down about 9%. This is that SPAC ETF that just launched. I've said my thoughts about it again. I want to say it again that I will never invest in this, because if I wanted to invest in this, I would just buy regular SPACs. This has no benefits of SPACs other than the way up. It has no back end protection. There's no backbone. Why would I buy into this? This makes absolutely zero sense for me. This is like buying on more volatile, getting the worst of more volatile IPOs without being protected, like normal SPACs. Why would I get into this? I'll never put money in it. Special purpose acquisition companies have become a hot area of the market as a way for purchasers to avoid the costly, time-consuming initial public offering process. Instead, they sell shares of a company that has no operations, promising the money within 2 years to buy a private one. But after a giant rally in 2020, these stocks were engulfed in the market rout and extended losses on Friday as volatility remains elevated headed into next week's presidential vote. Considering the serious uncertainty about the stopgap plan for the United States government and next week's election, it does not surprise me that there is hesitation about adding more money to the so-called blank check investment space, said James Pillow, managing director of Moores Cabot. People understand that people are starting to understand and jump into SPACs because of that floor, right? Normal SPACs, not that ETF. People know that that's one of the only places you can park money and possibly get anything back right now. So the big question is, are SPACs totally dead? Or are we going to buy the dip and stop being such a Sally? Well, let's take a look at, let me see there, Google. So what's going on? This is showing interest over time for people searching SPACs. Tell we've had some peaks. You can tell it's been dipping. Did you realize that you can probably trade just by using this? Crazy is that? What if you got to here, it started going down, and then this next leg down, you shorted everything? Probably be in some money right now, wouldn't you? Take a look at that. How about, let's add the word HYLN to it. Helion. That's going to be the red. The blue is just the SPAC, this one here. Red, we put on top of it. Do you think that the searches correlate with the price of the stock? That's why hyping stuff is cool, right? Very interesting to me to see this, right? When stuff is doing well, people are looking it up. When stuff's going down, people stop looking it up. That's why on this channel, I always try to focus on how do we make money now? We talk about it when stuff is down and not cool, way back over here, right? How about interest by subregion? This helped sell me on HYLN, okay? Because if you compare this to the map for SPACs alone, the SPAC map, if you've seen a political map right now of the red versus blue, let's call it like the whole coast, right? They basically correlate with SPACs, which I thought was kind of funny. The people investing in SPACs are coasters, or West Coasters and East Coasters, and then you've got the little dips that come up to here. These are the people investing in SPACs, but like places like Oklahoma, North Dakota, South Dakota, Montana, Idaho, they don't look up SPACs whatsoever. The whole central United States does not look up SPACs compared to the rest. So I found this interesting that the middle of America does look up highly on them. This tells me that you've got a lot of oil up here in the Dakotas, and you've got a lot of stuff in Nebraska and Kansas and stuff. People searching for highlights. So that tells me that people want this. What does that mean? That there's going to be sales for these things. People actually want this. This makes me want to put in a long position and adding to all this other stuff you guys have been telling me about them into them. When will I get in? I don't know. Not tomorrow. But sometime in the near future, it's just something I want to be long on because people want them. The people who use these semis want them. They all live in these places. Very interesting to me. Ravencroft, he's one of our subscribers. He wrote and said, once stimulus checks come back to them in the mail, SPACs will go back up. That is one of the only things lately that has almost coincided with SPACs. The second more money is coming out, stimulus, the market usually zips. When the stocking gets rocky, everything goes down. Something to pay attention to. So should we start buying high and selling low? It looks like it could have been a decent ride on this one. What is this? This is Lordstown Ride. Diamond Peak Holdings. Imagine if you took a short around the 26s. How about HYLN? Imagine if you took a ride from the 50s and shorted this thing and now it's sitting at $18. Or is it best just to go back to basics and buy SPACs before they're cool? I think when people are starting to flip, like I said, the big boys started to come out and say, when everyone's saying SPACs are dead, the bubble has popped. That's usually the time to buy. Because not everything, but most SPACs are doing this type of thing. Like decent mergers are coming out, and the SPACs aren't even moving. Does it scare me? No. But it just allows me, it's allowing us way better entries than before, right? like me, that I'm never gonna get in on a zippy up like this going into something. I want to get in when people hate it. They stop searching for it. Try to look at the big picture here and see what's going on. You can play both sides though, and it's just something to pay attention to. If you think something is way too high, and you can prove it every way you run the calculation through your head, the height, everything, look at it. If you've never shorted something before or bought a put, just something to look at. But what I'm getting at is I think it's too late. I think stuff is close to being tapped out, right? Could it still go lower a little bit? Yeah, but just look at this graph. What does this tell you? Does this tell you it's a good buying opportunity or a good time to sell? Looks like a terrible time to sell, right? I want to buy it when it's low. It's already too late. That's what I think on most of these. Could SPACs and many other newer to market IPOs go back to the moon after election? I think so. A lot of people pulled out money and gone to cash, just like I've been telling a lot of y'all to do, right? Or get in, floored out commons for SPACs, because worst is going to happen. You're going to lose like what, 2 to 5% if you sell. Can't go much lower than like $9.75, right? $10. If you want to park money in something, why not, right? I don't know. I think, historically we looked at the election stuff on, when was it, Friday? I think the election video we did. If you haven't seen that video, check it out. But there's usually not too much activity. People get slightly wonky before election, but nothing crazy. Afterwards, when Trump got elected last, we did have a little bit of run up, but we've also got this thing since March happening, so I don't know. I think we're gonna still be fine-ish, but we still got to figure out when, and an actual game plan is set in stone of how the world is going to open back up. Are they going to just shut everything down for a week or two and just say no flights and stay in your house for a week? I don't know. I just want to get over it, man. I'm just tired of thinking about it, tired of hearing about it. I want people to go back to work. I hope we can figure it out. And I don't think any big thing like a vaccine is going to be able to come out and help people and save the day at a snap of a finger anytime soon whatsoever either. So I think until we fully get to there and get that thing figured out, or just forget about it, and that might be one of the ways to deal with it, we're not going to get too crazy of moons, right? You might off these ones that have slammed down, but as for the S&P, I don't know, man. S&P 500, and I don't know. I think we're gonna, no matter what, we're gonna get a reaction to whoever gets picked into office. Just be careful. That's all. I still think it's definitely a good idea to have your hedges set up. If you haven't got a hedge, you might want to get into something just in case. Why not make some money on the way down? Or if you think it's going to go up right after election, buy a hedge when market's up, not when it's down. Let's look at SPY. So what's going on? So it's doing exactly what it kind of looks like it should be doing, right? It hit this, let's call it like 30-degree angle we got coming off of previous, okay? It came down and tagged it on Friday, just went a little bit past it, just barely, but then zip, 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 and then it fought here like the rest of the day. Half the day it just kind of sat here at 326. It didn't want to cross this. What do we got below that? We got the 320 that we drew in, right? This is the big one we can't cross. We don't want to cross that big one. If we cross that, where's it headed next? The 200-day moving average down here, about 320, 319, 318. If we get way far below this, like down to like 313, what's holding this thing up, dude? What is holding this up? Let's try to find out. Maybe 298. It's a big drip. That's a big drip. I don't really see any other lines, That one's even, I guess in the front and the back it's holding. And then below that you can draw another one like 294, if you want. But just watch this area, right? I think we're just going to keep fighting this till election. And then whoever gets in, the market's either going to go up or it's going to go way down. protect yourself. Get on both sides. I don't think it's too late to protect yourself for the downside. You know, again, the reason we got this line here too is because we got this middle arch. We don't want to get past this. That's what's holding us. So just pay attention to it. Silver, let's see what's going on with silver. This could still go down to the 200-day moving average, you know, sitting at 21. Just looking at it. It's tried dripping below the 100-day moving average. I don't know though, you know, I still am a long-term bull on silver for sure. It's just when is it going to happen, you know? If you have no exposure to silver, you could get into, you know, like a bigger silver player if you want. Just hedge yourself against the next rise. You know, same with Bitcoin and stuff, that everyone's still just in that shaky mode. No matter what, it's going to be going with SPY for nowadays. Another hedge for coming Dipski Hulk Smash Rooney. Another way to hedge. So this one is called BNKD. This is a 3x inverse big bank ETN. It's another hedge you can get into if you want. So what's going on with this? What am I talking about? Basically, when the stock market tanks, this will go too. But it goes the opposite way. So you can actually make money. So back in March, right before March, this was chilling about 25 bucks. March dump hit, and where did this go to? 97. About 3x in your money there. A little bit more. Where's it sitting out? Like 11 bucks. Dude, so imagine if this goes to 97 again. 8x in your money, 9x in your money. Maybe, you know, if we have a bigger dip than March, it could just keep going. This is basically another way to short big banks. Kind of sweet. Look this one up if you haven't. Any other plays that y'all want me to take a look at or I missed, put them down in the comments, let everyone know. There's still some workhorse information kind of dripping in and out. You know, we know that they're going to announce by the end of the year, is what they say. I was really thinking that Trump was going to try to put something out right before the election. It could still be Monday, though. You know, like maybe he's waiting for that last little boost to get from Ohio. Last time I checked, Ohio was fine, though, but I'll have to look at it again. You never know how behind they are, too. So he could be just waiting until tomorrow to announce it, or maybe tonight. I'll let you know if it does come out. If you haven't subscribed, please do it. It definitely helps out the channel. We've also got a Patreon. It's still pretty new. Still trying to figure it out on all ends, but I'm still sliding you guys deals here and there. And so far I'm hearing that people are making their money back at least a little bit. So that's good. We'll keep trying to develop that and make everything better just like we're doing the rest of the channel. Thanks everyone. And if you wouldn't mind spreading this video around, sharing it with your friends, give us a thumbs up. It's greatly appreciated. Y'all have a good day. Did you know that we give away free silver? Simply leave a comment on the video, and as long as you're in the continental United States, you can be automatically entered to win. Please friend us on Twitter and StockTwits.